Welcome to the esynergy podcast, conversations that cut through the hype and get to what actually works. I'm Ulrike Eder, Chief Marketing Officer at esynergy, and in each episode, we sit down with business and technology leaders to hear their unfiltered story, the lessons hidden behind success and failure, and practical steps to turn big ideas into big impact. Joining me today is John Mason, CEO of PPL, the digital trading platform at the heart of the London insurance market. PPL has played a key role in really shifting the market from paper-heavy processes to structured digital placements and really changing how insurers and brokers communicate on risk. In today's episode, we've got a lot to get through. There's a number of things we're going to touch on. One, the impact of digital trading on the market. We're obviously going to talk a little bit about AI, John. We have to.
Inevitably.
And what it brings for the insurance market. And thirdly, we'd like to touch on what it truly takes to modernize an insurance market that's so heavily characterized by relationships without really changing what makes it work. Insurance, John, has moved, and we're seeing that a lot with our clients, from paper-led, heavily relationship-anchored processes to structured digital workflows. Capital pressure has increased, and private equity ownership has also sharpened the focus on technology, scale, and cost. I guess for listeners and audience that aren't so familiar with PPL, would you mind introducing PPL a little bit to us, and also where it sits on that ecosystem or in that ecosystem?
Sure, absolutely, happy to. And thanks for the opportunity to chat. So I guess really, I think, the market is moving rather than moved as such, and that's something I suspect we'll get into later. But if I talk about what PPL is and also what it's looking to be, PPL, most people, Placing Platform Limited, would think of us as that technical capability to help bind a specialty contract within the Lloyd's market. So we would sit there between the broker and the underwriter or underwriters, or syndicates, and help have a digital record of the contract that took place for a particular risk. That's the sort of the traditional, that's what I would think of as digital replication as opposed to digital transformation. That's perhaps the old way of thinking of my previous background to insurance being the financial markets, where you would have an open outcry exchange and someone would throw the ticket over their shoulder to someone in sales operations and say, put that into the system for me. In that sense, we are that system that trade would get put into. Where we're trying to go, and I think where the industry is trying to go, is to be a genuinely digitally traded environment. So not do the trade through conversation, through WhatsApp, through telephone calls, and then record the transaction after the fact as a record-keeping exercise, but actually trade digitally, construct the trade as you go, and then have the placement and the bind happen as a matter of course through that single life cycle. So PPL is at the heart of that. About 85% of that London specialty market, that includes Lloyd's and the company market, is placed over PPL today. We are trying to push left, as I would describe it, into that trading end of that life cycle, so that placement is not seen as a separate data entry exercise or even an API exercise as it is perhaps thought of today, but actually just happens through a single life cycle as a consequence of trading. So trying to answer that, it's what we do today, but also where we're focused tomorrow.
Heading. Yeah. And I guess my next question is around what are some of the structural shifts that you see happening? And I guess one you already answered, and we're going to get into that, which is around really shifting to that digital trading way of working, I guess. Are there any others that you see at the moment?
Currently, I would say it's the market moving towards that API integration. So as I touched on, a lot of that work to date of entering the placement has been manual. It's been an exercise that the team has undertaken. And increasingly, we are working with clients and organizations who are looking for that to be through an integrated environment, through APIs. So us integrated into their policy administration system, their PAS system, or integrated into other environments, so that flow of data can happen electronically rather than through fingers and keyboards. The second real structural change, I think, is the inevitable one that we sort of touched on in the intro, really, which is the impact of agentic and AI on the infrastructure, on the environment, on the industry. What does that mean? And I think that's a really interesting question to get into, as to how organizations, brokers, underwriters embrace that technology, and how can they get the most out of that technology rather than perhaps fear it in terms of it replacing or putting people out of roles. I think there's definitely a thought process that the industry needs to go through there. But those are the two big structural changes I see, and that as a consequence, you see that shift to almost a broker becoming a trader type of environment, more data driven as a consequence of that digital transformation, having greater data at their fingertips and most likely changing the nature of the relationship with the client, cementing it further, not doing away with brokers or anything like that, but actually enabling them to have a different type of conversation with the client than perhaps they've done traditionally.
Is the insurance industry really rethinking its entire identity?
I get the sense it is going through that process. I think
Is it having a midlife
I'm new to you.
crisis?
I'm 2 years in. I mean, I'm not trying to preach. There's nothing worse than someone coming from another industry and saying, "Oh, we did everything right. You guys do everything wrong. All you have to do is do what we did." That's not the case at all. But I do think the industry is thinking hard about what does the specialty insurance industry of 2030 look like, and I think that is fundamentally different to today, and perhaps as it has been in the past. That's not to say that relationships will disappear. I think they'll change, but they won't disappear. And the level of automation and the level of integration, I think, will increase. To date, it feels as if a lot of the change, I used the phrase earlier, has been digital replication. It's, we do these things manually today. Can we do them in a computer sense tomorrow? And it's been an operational efficiency drive, as opposed to, is there something that we can do digitally? Is the digital transformation there to actually enhance the way in which organizations do business, help them discover new revenue streams, create new products more quickly, be more responsive to client needs? One of the stats that I found fascinating when I came into the industry was, I heard someone say only 10% of a company's risk is actually covered through insurance. The other 90% they mitigate or carry in other ways. To which my obvious response is, well, how do we get at that 90%? What's lacking in our ability to offer something to those insured organizations that we just can't today? And I think that's where perhaps the opportunity lies with that genuine digital transformation, is, does it identify and does it surface new areas of opportunity for our broker and underwriter clients that just a digital replication of today's process wouldn't do. So I genuinely do feel that the industry is looking at that aspect in a different way than it has done perhaps. And I feel that's been a shift in the last 9 to 12 months.
We obviously talked about the first topic is around that digital transformation. You just talked a little bit about it and the impact it has on the industry. I'd like to kind of dig a little bit deeper into that. And I think when you and I spoke first, we talked a little bit about if that shift and that digitization has changed the balance or power between the broker and the underwriter. Is that where do you sit on that?
I'm not sure if it changes the power, to put it, as you say, between the broker and the underwriter. I mean, if you look at the industry today, it's an asymmetric industry. I mean, maybe 10, 12 brokers, maybe a few more, up to 15, let's say, probably place 80+% of the risks within the London specialty market. So it's not a 50 brokers, 50 carriers, 50 brokers, 50 underwriters type of relationship. So, and again, when I've spoken to people, they've said, well, the broker tends to dictate where the placement is made. The broker ultimately is the one who's got the client relationship and is bringing that client to the London marketplace, and the underwriter is in a response type of, again, in my old parlance, fill or kill type of, can we do that? Can we do it at the right rate for the broker, or is it not a piece of it, in a business we're interested in? So the underwriter in that sense is more responsive to the broker bringing the demand to the table. So I don't think technology necessarily changes that relationship. I think there is an argument, a discussion, which is will technology change the relationship within the broking community or within the underwriting community? We already see large organizations like Marsh, for example, making comments such as they would expect an electronic response from an underwriting perspective with everyone that they deal with by the end of 2026, or they won't be placing their business with you. If I've misphrased that, sorry to anyone at Marsh, but I think that's the point they're making. Now, that means if you're an underwriter, you're going to need an environment where you can respond through API, but through a technological means, not necessarily through a phone call or through an individual response. And that may then change which underwriters come to the fore and which don't. So I can see technology perhaps changing the emphasis within the underwriter community or within the broker community. And again, other initiatives like Aon with their 3x3 initiative, where they're pushing that change in the relationship, going more data-driven, more insightful. I can see those changes, but I'm not sure if that would necessarily translate to a fundamental shift in relationship between broker and underwriter. So I think the intra-broker or the intra-underwriter relationship may shift, but I'm not sure if the relationship between broker and underwriter will shift as a consequence of technology. I think it'll also come down to how the broker grasps technology and where they position themselves in that ecosystem, within that infrastructure, so that they're not in a position of either being threatened or disenfranchised. Or we only saw a few weeks ago where I think it was OpenAI announced that they were licensing the Spanish sort of retail insurance capability onto their platform, and most brokers saw their share price, or listed brokers, saw their share price drop 20, 25, 30% overnight as a consequence of the disenfranchised argument. Are brokers still necessary in a world of AI? I think they absolutely are, but I do think the broker needs to think as to where they deliver that value to their client.
Do you think that the broker's area of responsibility maybe shifts more towards almost that of a trader, where you now have instant access to data, or you will have very soon, and markets? Does that kind of gap narrow a little bit?
I think, again, if we look at that investment banking community, that the shift for the broker will be, yes, an element towards trader, as we would think of it, but also, as a lot of them will do today, they'll provide research, analysis, risk advisory, consultancy. Those are all the things that I think become important, particularly in a world of AI and agentic AI. There was a great book I read, and I've written a couple of articles on it recently, on the back of a Microsoft AI event where there were notable speakers talking about what might this mean for us as an economy more generally, not just insurance, but the UK as a whole, which is predominantly a service economy. And the great book I read was called The Experience Economy by two gentlemen called Pine and Gilmore. And they spoke about really the Starbucks experience, which is if you productize a commodity, you get a service. If you productize a service, you get an experience. And so how does Starbucks or any coffee chain, for example, charge what they charge for a coffee, and we all pay it quite happily, for what is probably pennies worth or fractions of pennies worth of coffee beans as a commodity? And it's really because of the experience that you get. And the thought that occurred to me as I sat in this particular conference was, robots, in essence, productize the shop floor. We went from people putting things in boxes to robots putting things in boxes to building cars and so on. is AI and is agentic AI going to do something similar to the service economy? In which case, how do we migrate to a experience economy? And I think that's the question for both brokers and underwriters is what's that relationship with their client? How do they offer something which is more of an experience, which would include trading and data-driven insight, but might also include risk advisory? It would include really understanding where that client wants to go with their risk profile and how it meets their business needs, and therefore a much closer relationship. Now, the good news is AI is never going to offer that, agentic or otherwise. It's just never going to replace that type of relationship orientation. What it may replace is I can place this trade here, or I can place this risk with lead A, follower B, follower C. So I think that's, if the broker is just looking at it saying, I provide a service, and that service is to go into the London market and place this risk, that broker needs to fundamentally, or will potentially to fundamentally rethink what their value proposition is to their clients. I think there's an opportunity there. And I think that is then that more holistic trading, advisory, research type of capability that you would see in the investment banks, is you'd see that in the major brokers.
Yeah. And I guess what we're seeing is over that structural shift that the insurance industry is going through around the digitization, AI is just layered now on top of it. And I think it's not just insurance. We see that across industry sectors, there's a lot of things worth paying attention to. And you just mentioned some of them that are really valuable and working and implemented already and operational. But then there's a lot of hype around other things that we're spending money and time on.
An awful lot of hype. It's not. It reminds me in some respects of when we had a lot of hype around blockchain. And everything, blockchain was going to solve everything under the sun. And when you really distilled down what you were trying to solve, you could actually do it in better ways other than blockchain. But the knee-jerk response was always, "Oh, blockchain will solve that." I think there's a danger that we're getting into that a bit with AI, which is, "Oh, AI will solve that. AI will solve this," and absolutely, AI will do some things. An agentic capability will deliver some capabilities and some benefits, no question at all. But I don't think AI and agentic is a solution for everything. Equally, what it isn't a solution for, and interestingly, one of those articles that I wrote, a lady responded to it saying, we shouldn't particularly be thinking, what can AI do? Maybe we should be working on the assumption that AI is going to do everything. Now, what can't it do? And that's the areas that we need to focus the people on. Mm-hmm. I thought that was an interesting slant that particular individual sort of took, which is maybe we need to invert our thinking. I was talking to a consultant the other day, and they coined the phrase service as software. And I thought, well, if anything demonstrates how things have been thrown on their head as a consequence of AI, we spent the last decade talking about software as a service and SaaS, and now all of a sudden we're talking about service as software, which really ties into the fact that if your business is around providing a service layer, you do have to think long and hard as to, if software can do that, where does that leave me and my business to move forward? And we all have to think about that. And I think that's where the challenge and the opportunity for the insurance, the specialty insurance industry comes from. Because there are areas, absolute areas, that AI will just never go. And Chris Croft at Lieber responded to another one of my articles yesterday saying, would we have had insurance for the automobile or the plane or whatever it might happen to be if AI had been involved and it had said, well, this is a car that doesn't go on roads or whatever it might happen, it would just not have happened. And I think as you look forward, what people are good at is assessing that future risk. AI necessarily, I don't think is going to feature in those areas in the same way that people can.
Mm-hmm. And at PPL, would you mind sharing a little bit of what your view is and how you implement it, how you use it within the business?
So, like everyone, that we wouldn't be a technology company if we said we weren't looking at AI and implementing AI. So, we've used it specifically around generative AI for extraction of data from unstructured documents. The specialty market is document heavy in terms of the market reform contracts and SOVs and so on as to where critical data is held. So we've looked at using generative AI to extract data from those documents. We've also looked at generative AI around document comparisons and putting a context around that. We've done that using ethical principles. So we're not passing every query up to an LLM. That's something that our clients have been very clear on, which is we want that to stay within that world, not go up to a larger hyperscaler's underlying model, for example. So we've implemented that sort of ethical AI approach, which does put a greater emphasis on the prompting, but that's an important factor that we feel we need to deliver. And then the next step for us, which is not that far away, is then how do we look at agentic and agents? So some of the tasks that either people would do, adding stamps, adding users, adding subjectivities to a contract, can we provide agents around that where someone could sit in a co-pilot within Office 365 and say, I need to add a subjectivity to a contract, please, and the prompt can then take them through that process. All of that identity management happening in the background. So there are specific AI elements, but then there's an underlying enablement capability as well. So we've done a lot around identity management so that someone who is coming into the software does come in with a secure identity and can only do the things, or the agent on their behalf can only do the things that a approved user could do. There's no concept of a sort of a super user and the AI agent can do anything. That identity management is a critical piece, I think, of the agentic story to make it work and work well. So that's some of the areas that we focused on, is some of these framework enabling areas, which will then allow an agentic layer to come on top.
Great. And if we shift into then, we touched on it a few times, on the relationships are still key and important to the industry. And I remember in our chat before, it struck me that you were quite positive about the opportunity that AI brings. And you said those, and I'm paraphrasing, but those that will win are the ones that see the opportunity rather than just look at it negatively and question everything, and are laggards, I guess, in adoption, in how to use it. Do you still stand by that?
I still believe that, yes. I still think the opportunity here is to sort of carry out, what you might phrase as that experience audit. So what does my company look like? Almost as a theoretical exercise, you might want to do it at the moment. If we assume agentic AI is going to prevail, let me put it that way, what would my company look like? What would I need to do to my company? And where am I today on that journey, if you like? What would I need to do? Would I need to empower my brokers more? Would I need a different type of individual in that seat, for example? Is it an education element to that individual or group of individuals to have a different type of conversation with the client? But I think if you carry out that sort of honest audit of your business on the basis that, however you think of it, as worst case or best case scenario, that's what my business will look like, I think that in and of itself would probably uncover certain opportunities. Then I think it's going to be how quickly can you get there. We know that experienced businesses do well. The other benefit of an experienced business is basically price preservation. Neither you nor I walk into a Starbucks and feel that it's a race to the bottom on the price of that cup of coffee with Nero or Costa. And I guess for the benefit of the tape, there are other coffee providers available out there, but they're just the three that come to mind. But I don't walk into any of those chains and think they're in a price war with each other. They're in a race to the bottom with each other, because the experience element enables that premium pricing to be maintained. I think if the broker, let's say, in this instance, can really identify what it is that they're bringing to the client, that premium capability, then actually the idea of data and transparency and so on does not mean an automatic race to the bottom. There are other things than price which will determine whether a client will do business with you or where you do business. And again, you see precedents for that in the financial markets that I've come from, where best execution prevails, but best execution is market liquidity, it's price, it's speed of execution. It's based on a number of factors which would determine where, in this instance, the smart order router, as the Americans would call it, would place that trade. And it may very well be the same, moving to smart placement. We didn't really touch on that as a potential major structural shift. Moving to fast follow behind a lead. All of these things are data driven, and rather than perhaps individual driven, and leaving the individuals to work with the highly exceptional, high value items. But that doesn't mean these other areas will get commoditized and be low value, low margin. So I think looking at that environment and understanding how that's going to progress, that audit is something that an organization should undertake and say, look, assuming all that happens, where will I be? And I think that is the opportunity as I see it, because that, I feel, the precedents are out there. That's where the industry will ultimately head. And if I were running an organization, I'd want to front run it, not be that laggard.
So you say double down on the opportunity and double down on the relationships as well.
Yeah. Yes. You summed up in 4 words or 6 words what I took about half an hour to say. Fantastic.
John, we're almost at the end of our time. I guess one thing I would like to ask you is for your peers and for our audience from the insurance industries and leaders that are thinking about what to do next, how to take what they just heard into practice, into their businesses. You mentioned start with an audit, think about what does my reality from an AI perspective look like? Are there any other kind of do's and don'ts? Try that tomorrow that you could give us a piece of advice?
I hear increasingly a lot of people looking at agentic or AI POCs. I think what I would say there is look at it perhaps more transformationally than just replicating a service. I think that audit is probably the next step that I would think about doing. Is where does an organization fit? How is it going to operate in that 2030, 2035 timeframe, let's say? And how might I want to get there first? And how could I get there first? So I think that would be the area that I would look at. So yeah, I think probably the audit was where I'd start.
Perfect. Well, John, thank you so much
My pleasure.
for spending the time with us, and looking forward to hearing the episode on all your favorite channels. Thanks for listening.